Hi guys and welcome back to the channel, this time from beautiful south of France. Look at this beauty, I mean absolutely stunning. This is actually the village where the French president comes every year on a summer holiday, so definitely a good place to relax and forget about the markets, which haven't been looking rosy for quite some time now, pretty much since the beginning of the year. However, the last few days it has been looking brighter, actually a bit of green there across the markets, but honestly these things are just short-term market corrections. They go up and down depending on a few bits of pieces of news here and there. I mean, there's just one politician who has to say a right or wrong thing and markets can move immediately, usually linked to employment data, inflation data, what have you, a lot of different aspects, but these are very much short-term movements and don't really impact the overall macroeconomic landscape, which honestly still looks extremely bad. I mean, let's face it, we still have the supply shortage going on, and that's one of the big drivers globally for production, for output. I mean, Tesla, even the gigafactories, I believe in Shanghai and Texas and in Berlin, they have massive issues because they just don't get the supplies that they need to deliver the cars, and that's a big issue, and that's one of the reasons why Elon Musk and Tesla is looking to lay off a significant part of their workforce. We have Russia, Ukraine going on, we have the highest inflation since years, so all these macroeconomic factors, so these are the big global economic factors influencing the global economy, and they look as bad as ever. So honestly, even in the short term we may have some good news here and there. Overall, we're still in a very much bearish market. Some people say we're already in a recession. Some people say the recession will come very soon. I think we haven't seen the worst of it yet, because only now do we see a company starting to lay off. And that, I think, will have a huge ripple effect on the entire economy, because the more people are being laid off, then you're going to have less productivity, companies have less output, they can pay less, and then it's a kind of downward spiral. So honestly, I wouldn't be surprised if we're going to see that bad data continuing easily until the end of the year. Personally, I think it might even go until 2023. But yeah, well, listen guys, it's not that I want it. If it recovers earlier, that's great. But I think we need to be cautiously optimistic and realistic. So, I just don't see how that's going to turn around the next few months and change anything quickly. Especially in autumn, we're going to have energy crisis on top of this with gas and oil shortages being cut off to Europe and other parts of the world. So it really looks gloomy out there. And that's why one good thing I really started doing recently, as much as I'm into reading about investing, personal finance, general economics, having been 1 week in South France, I can tell you the internet is really bad over here. But that was actually a good thing, because I ended up reading way less news. And honestly, for your mental mind, it is so good to sometimes disconnect. I mean, of course, we need to be in the know. As investors, we want to see what's going on, etc. So I'm not completely oblivious to what's happening in the world, but we know we're in a cycle right now. So unless you're a daytime trader who really needs the latest news, this is just noise, right? So the less you read, you're gonna be less tempted to sell or to make some irrational decisions. So for me, being in mostly long-term positions, I know they're gonna go up. Maybe it will take 2 years. Maybe it will take 5 years, maybe 10 years, I don't know, hopefully not, and that would be very long, but I'm prepared to wait for it. And I only have two really risky positions, and that's my Nexo tokens, because yeah, they're probably the most volatile, and my Polygon holdings, another coin I have. The rest is all, and that's my majority of investments, is all stable long-term growth, and they're gonna come back, no way around it. I mean, it's just gonna happen. So for me to waste my energy and my thoughts and have sleepless nights over some piece of news that came out that may be bad for a certain asset or investment I have, it's just not gonna make sense. So that's why I'm very careful what I read, what I consume, and I want to do this going forward. Of course, I'm not gonna not read any news anymore. I'm just gonna try to panic less, read less Twitter, and follow those hypes, because obviously even people on YouTube here, right, they try to create anxiety. I mean, that's essentially what gets clicks, right? I mean, in bad times, actually, most people get so many good views, and I get it, right? I mean, that's obviously in the interest, but I'm just cautioning you, try to be mindful of that and don't try to consume yourself with news 24/7, because that's just not healthy. The saying is true as ever, investing is a marathon, not a sprint. You need to be in it for the long term, stay positive, and that's very important, and invest in things that have long-term value, right? That have utility. In the case of Bitcoin, I mean, I just can't see this going away because so many institutional investors invested in it. Yes, it's a highly volatile asset because also brings a lot of rewards, so that it drops is only natural, right? But the other investment stocks, I have Apple, I have Google, I have the S&P 500. I mean, if you tell me the S&P 500 is going to disappear in this bear market, that means the American economy would completely collapse. And there's just no chance, right? That's why I really think invest in asset classes, at least the majority of your money, where you see long-term growth and long-term value. It's fine to have a few speculative investments, and that's what I do as well. I mean, I have Polygon and Axel, but that's a very small percentage of my holdings. Majority is in safe asset classes. Of course, it hurts when I see the markets in my portfolio. I mean, Bitcoin, for example, I bought pretty much a lot of it at the peak of the prices. And yeah, I could be depressed now and be upset about it, etc. But it's a long-term play for me. In 10 years from now, I will look at it and say, oh my God, look at what a cheap price I bought it in, right? So all is relative. You can say the same when Tesla was $200, right? Oh my God, people said it's overpriced. Tesla at $200, no way. They didn't even make profit at the time. So you could say that was overpriced. Today, even a bad market is around $600, $700. And it used to be at almost $1,000. So everything is relative. And once again, life is cyclical, right? Right now, we're in a downtrend cycle, but we're gonna see upturn cycles once again. And that's normal. If the stock market would only go up, there wouldn't be such a gain because everybody would put their money, and then over time, naturally, the returns would be lower as well. So it has to be cyclical. It has to move up and down for people to make money. Some will lose money. That's the name of the game. So guys, if you take anything away from this, go easy on the news. I mean, they can be your best friend or your worst enemy. Of course, you need news to be in the know and see what's happening. I'm not saying to never read news, but be very selective and mindful of which news you read and the frequency, how often. You don't need it 24/7. You don't need the latest push notifications. Make sure you choose the right asset classes to invest in, and in the long term, you're gonna be good to go. If you enjoyed the video, please give it a like, subscribe to the channel, and if this video is gonna get over 100 likes, I'm gonna jump into the pool. Well, to be fair, I'm probably gonna do this anyways. As always, guys, I thank you so much for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.